It's kind of like this. If you want to solve for inflation, you're going to have to crash the economy. The problem is nobody wants to crash the economy. That's the problem. So if you can't crash the economy in order to mitigate inflation, which isn't politically feasible, okay, it means that all your 401ks are going to go to shit. It means that the wealth effect that has been in effect since 2008 is now going to be compromised. It means that your standard of living is going to go to shit. It means that all this extra wealth that we all seem to have is also going to be repriced and readjusted. And guess what? There isn't anyone out there that wants to do it, especially now in the US, because midterms are coming up and the likelihood that the Democrats are going to get literally shellacked is pretty high, given everything that's going on. And so, because let's face, you shoot the person in power. It doesn't matter whether they created the mess or not. It's irrelevant. You
Doesn't
shoot
matter if they're
whoever's there.
Democrat or Republican, right?
It doesn't matter. It doesn't matter. So you asked me how long. My guess is, and I think I answered that question, when you have the Federal Reserve coming out saying openly that we believe that inflation shall remain elevated for quite some time, it's just that on a year-over-year basis, we believe that the level of change for inflation is going to be smaller than it was in the past. They're essentially sending you the memo. They're telling you get used to higher inflation for longer, except that, in other words, if you got 7.9% inflation today, maybe you go down to 6, but 6 is still too high because their target rate was 2. So
when's the last time you believed the Fed?
I never believed the Fed. I don't believe any of them. I think they're all clowns. But at the end of the day, they run the show, and we kind of play along. Some of us know more than others, but the reality is they know that people can't ignore it anymore because middle America is getting literally hollowed out. The average middle class person and poorer classes, both in Canada and the U.S., are getting skewered, literally skewered. Okay, and they vote. Those are the people that vote. So now they can't ignore it. So to answer your question, I believe that inflation shall remain elevated for some time. Lacey Hunt, who is an ex Federal Reserve member, notable American heavyweight, has basically said get used to longer and higher inflationary periods. So, I mean, I'll just heed the advice of someone who obviously has got the pedigree and the experience to drive it. From experience, I'm telling you that I believe that you want to kill inflation, you're going to have to crash the economy, and no one's going to crash it.
But Abe, Lacey Hunt also says that inflation is transitory, and so he disagrees with you on that matter. And also, there's the bigger risk that he's been talking about, which I actually agree with, is that deflation is obviously the bigger long-term risk to most societies. Most societies are far more scared of deflation than they are inflation. Deflation is what causes revolutions and pitchforks.
Yeah, I agree.
Inflation is tolerable, and it's sort of like a jubilee in slow motion, so that allows you to kind of deal with a debt situation. I think the fundamental problem we have is that there's too much debt.
Do you think we can settle into a rate? Or
I
a
think
middle ground?
Oh, good question.
The issue is the deterioration in earnings, right? Like, and Abe was talking about that. If you look at real earnings, there's some -3%, like real average weekly earnings. You look at inflation at 7%, so obviously that means there's massive deterioration in the standard of living, right?
Yeah, there's so much balance sheet of cash sitting out there in corporations. I mean, you have to imagine that there's some way for sort of a middle ground between all this.
But there's not, because and you learn that kind of in economics, right? And you can actually see that throughout history, is that high nominal wage growth is always a pretext to capital.
Yeah, but wages are not increasing.
Nominal wages are increasing.
Overall wages are not increasing.
On a real
nominal wages are increasing. They're just not increasing at faster than the inflation rate. So on a real basis, you're basically running on a treadmill, but you're moving backwards.
Yeah.
And worse than that, you've got the inflation that's actually increasing so fast that everybody's sitting here looking at this and going, "It's the end of the world." My question is there a middle ground?
No, because nominal. That's what I was saying. Nominal wage growth is a pretext to capital deepening. Why am I going to pay somebody $24 to be a cashier at McDonald's? Right? Like I'm not.
They are.
Hey, all right, man.
But Abe, the bigger issue that I want to kind of throw in there, which is the fiat system. Obviously, this is all predicated on the fiat system. You can't have a dollar as a reserve currency without the fiat system, and so because of the debt, like I would agree with everything that you're saying, but because of the levels of the debt, if we actually even remotely hike 7 times, even 5 times, that will cause some sort of break. Even at the 10-year now at 250, I think that there's going to be some sort of break. I think that without a doubt, there's probably several European banks that are already broken right now. If you mark to market some of their derivatives that they have on Russia, et cetera, et cetera. We don't know where the bodies are buried. It's going to come out in the next few months. So, that's the sort of stuff that causes deflationary kind of spikes. And so I agree that there's significant increases with inputs across the board, simply because there's been a significant one. You've had COVID, you've had deglobalization, you had supply chain disruptions, and you'd have significant underinvestment across the board, across all basic materials and input goods. But whether or not that can actually translate into being able to pass that cost on to the ultimate consumer, that's a huge question. I don't think they're going to be able to pass that on, and that's why you have the risk of deflation. No.
Yes, but that's my point.
Well, I think they are passing it on, right? Like the New York Fed does the prices received, and it's like the highest that it's ever been in the history of the data recorded.
But to your point, do you think that will continue?
That onto the consumer?
I mean, I think it will continue into the near future, yeah. Because we haven't even started to see demand destruction, like relatively speaking, right? Like
demand destruction right now is a theory.
All right, so dear, I love how like Abe tried to finish his what he was saying, but he never got the chance to do so. And I just want to say, I heard Abe speak in other rooms too. You guys should really, listen and not like fucking interrupt him. Man.
Who are you talking about?
Abe, did you want to finish your statement?
No, I was just
Dave's been talking here for like an hour and a half. And we've been listening and having a great conversation, dude. I don't know what you're talking about.
Facts.
I think the only thing I'd say, I just want to kind of answer it, is that this whole notion around pricing power and how to kind of pick winners, because I think we're kind of all here trying to figure out, where are the winners in terms of, stocks and investment and whatnot. At least I think that's what one of the intent is here, is that, again, you got to look at pricing power and which course are going to be able to sustain themselves and pass, increased input costs to their clients. The problem with all of this is, and you're going to have winners and losers, and I think you're going to have to judge them on a relative basis, because I don't think anyone is going to get sort of untouched, if you will. They're talking about certain sectors, sectors in the US, and again, this is not investment advice. Healthcare sector seems to be one that is, does quite well, because let's face it, if you're ill, God forbid, you're going to pay. That's just the reality. So their demand is very inelastic. So it means that they're price takers. They'll take the price. They don't care what the price is. The issue is that what I'm more concerned about is the following, is that the U.S. economy is predicated 70% on domestic consumption. So when you talk about corporate balance sheets, those are different. Corporate balance sheets are fine for corporates. They'll determine their own investment decisions and whatnot. Perhaps they'll they'll buy back more shares when shares are actually more depressed, and they'll it serves to put a floor on their share price. But the reality is, they're not the consumers. The consumers are me, you, and everyone else in this room. And the question is, if you have prolonged, or the issue is, if you have prolonged inflation, you're essentially taxing yourself. And the problem is that you're going to have less discretionary. You're going to start thinking about substitution. You're going to start saying and rationalizing your spend. And you're going to say, well, I don't really need a new car, or maybe I won't take that trip, or maybe I don't need another whatever. Who knows? Whatever the basket of choices are. And so that is what drives earnings. They are the ones, the US consumer is what's driving all of this. And so you have to look at the health of the US consumer. And what I would say to you is that if you get any corrective action in the equities market, you know, it's no different than anywhere else. You start to feel less wealthy. Okay. If your 401ks are going from whatever, just fictional number, from $1 million down to 700,000, okay, and you get a 30% haircut. Look what's happened to tech over the last 14 weeks. I'm sure that you're not going to feel all that great about where you are. The problem is that if you start seeing sustained inflation, you're going to get earnings hits. And when you get earnings hits, because the market only looks at forward earnings, you're going to get readjustments. And then you get really, sort of a situation where everything kind of lines up together, and you have a weak consumer.